The dust hasn't settled yet on SFDR and ESG in Europe, and if you ask me, this is not going to be the case for the foreseeable future. This is not only because we now have evidence that a second version of the SFDR rules is being consulted at European level, but also because as we progress with the journey in the sustainable finance, we discover new trends that need attention. In this video today, I wanted to talk about one of these trends, which revolves around the use of ESG and sustainable finance terms in fund names. That is on the basis of an initial ESMA proposal for rules in this context, and also of a very recent report from ESMA on ESG names and claims in the fund industry, which is packed with data and actionable intelligence and will be very useful to all the managers who want to get involved in sustainable finance. Let's dive in. By the end of November 2022, ESMA came out with a proposal to introduce rules on the use of ESG and sustainable related terms in fund names. That was a specific moment in time because there were already some concerns voiced very openly about the fact that fund managers and other product manufacturers were using the Article 8 and Article 9 classification for purposes that were beyond the ones for introducing this classification, so not for disclosure purposes, but as a sort of labeling of their products and ultimately for marketing purposes. The proposal from ESMA to introduce these rules had also another reason. Notoriously, some European domiciles have front-run already Europe and have introduced their own rules to govern the use of what they define non-financial terms in fund names. And so the role of ESMA is to make sure that there is always a European equivalent of a rule that might have been introduced in a certain specific domicile. And so we believe that we will have these rules on the use of the name, even though the feedback of the initial proposal made by ESMA wasn't the most welcoming. Looking at this feedback, in fact, the Securities and Market Stakeholders Group commented that basically ESMA didn't really receive a formal mandate to issue these rules, but at the same time, the most important comment was that basically ESMA wanted, in essence, to introduce, using a quantitative approach, thresholds so that basically if the investment or the proportion of the investment in a portfolio were hitting a certain threshold, then basically the use of these ESG terms or sustainability related terms in names was allowed. And the view of the group was that using this quantitative approach would have anchored ESG investing that is not yet defined to the so-called filter or exclusion strategies, right? When there are other strategies like the engagement, the thematic, the best in class, that better reflect ESG investing than the mere exclusion. There is one point that is becoming unequivocal, and that is that when we are talking about retail investors, the name is the most powerful marketing tool ever. And so basically using ESG into a name of a fund or a sustainability related term in the name of a fund, and then presenting that fund to a retail investor as approach poses an higher risk of greenwashing than if the same product was presented to another type of investor. And so basically, given that greenwashing is one of the priorities at European level, we do believe that at some point we will have rules on the use of these terms in fund names. And looking at this very recent report from ESMA on ESG names and claims in the fund industry, we find comfort about these concerns surrounding risk of greenwashing when an ESG term is used into the name of a fund. ESMA has carried out an exercise of data scraping from public databases and basically has come to certain conclusions. The most important one is that when offering a fund to retail investors and when the ESG term is present in the name, that fund will be preferred over other funds that don't have the ESG term but might have a similar ESG investment profile. The second takeaway from this report is that basically when there is the use of an ESG term in a name, nevertheless the ESG disclosure is there, is in line either with the requirements of Article 8 or 9, and at the same time is also present throughout the entire suite of the product documentation. And so that's not only the marketing documentation, but also the prospectuses, the annual reports, and the key investor information documents or key information documents, which is a very interesting element because even though it's not required by current regulation and it's discussed for the PRIIPs, when a fund that makes a very bold claim of sustainability in its name and is for the retail market, product manufacturers would include ESG disclosures also in the key information documents, for instance. The last takeaway of this report is that basically the equity strategy seem to lend themselves a little bit better to ESG investing, and that is because an equity strategy fits well with the engagement style, which is one of the alternatives as far as ESG investing is concerned, because basically managers and product manufacturers can better demonstrate that they have engagement with the underlying and investee companies on sustainability related issues. So if you are still in the Article 6 limbo, if you are not ready yet, or if you haven't yet moved into the sustainable finance arena, so what do you make out of this recent report? Well, on the one hand, ESMA has flexed its muscles and shown that basically they have the skills, the knowledge and the resources to be able to police effectively instances of greenwashing. And that is a testament to that is the fact that basically they have been scraping a vast, I would say a huge amount of data online, publicly available, and they came to their conclusion. So it's like we can't really say that the fight of greenwashing is impossible because ESMA has shown that they have the skills and the capabilities. I think that for anyone who wants to enter this market and get out of Article 6 limbo, the idea is basically to have a clear definition of their ESG identity, their ESG message, but also their strategy, and make sure that basically that is reflected throughout the entire suite of documentation in a consistent manner, because findings show that when the claim is made very boldly in the name, it has to be substantiated also by, or it is substantiated also by a commensurate disclosure. And so the idea is that if your message is clear on ESG, if your strategies are defined, nowadays you don't have to abide to any requirement for you to be able to use ESG in your name, and that might be a powerful marketing tool, but ESMA has their eyes open and is ready to intervene on instances where basically the claim made so boldly is not supported by sufficient disclosure. There is more to come on sustainable finance and European regulation. Thank you very much for watching and stay tuned.